What's up, YouTubers? Guys, welcome to the room. Good morning. What's up, Horcrux? Hope I'm saying that right. Welcome to the room. Guys, we're going to have a good time today. We're going to do what we do because that's what we do. But first, we're going to check news, guys. forexfactory.com/calendar. If you are in Nexgen Pro Trader funding, that is prohibited, right? USD, red flag. It's a big no-no. No trading, because if you're an awesome trader, we're copying your trades. We don't need that sort of uncertainty. If you're not with Nexgen Pro Trader funding, I don't tell you what to do, but I will tell you news can make things crazy, and they can undo the awesome that you have going on. They can make the market spike, bump, jump, trip up, change direction, all the things that affect those patterns that you're trading, that you're waiting for, that you're demanding the market provides. So every morning, this is my first stop, making sure that I don't trade into news. Just a reminder for those of you that are new here, this is an educational room. We talk 100% about chart reading. We focus on being able to take these T3 indicators, to look at them, to recognize advantages, and then ultimately you will be able to turn those advantages into trades. One of the most common comments that I hear from people is that the accuracy the software provides is pretty crazy compared to what they're accustomed to. So who knows? Make your own decisions, guys. We're going to get to work. Let me minimize that. And let's start the good old slideshow, guys. Let's learn to read indicators. This is what I do every day. My first hour, each and every day, is the exact same first hour. I firmly believe, and a lot of neurologists will second, that repetition creates recognition, that seeing the same thing, doing the same thing, and yes, even saying and typing out the same thing, it slows down the market. It increases how quickly you analyze and make decisions. Uh-oh, guys, give me a Y if you can hear me. Pete made me mad yesterday, so I tried to cut only his audio. Cool, it worked. Awesome. The same way I stole fibs from Ron. Not really. Cav, you got none? Okay, here. I will reboot too, guys. I don't ever want you guys to miss out on anything. So let me do a quick little reboot on my Discord. I'll be back in 2 shakes of a lamb's tail. Back in a second. Bonk, 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 bonk. Open up Discord. Back here, education room. Pop it out. Can you guys hear me? What do you think? That was my reboot. Did it work? Did it help? Are we good? We rocking it very much like a hurricane? Who? Ron. Man, I love my special people. I'm in such a good mood. Be careful, guys. We're going to learn to read charts. This is my job. If I had to write a resume out, my resume would say, I teach people to read indicators. That's what I do, guys. So I'm going to hand you a checklist with only 3 rules that only takes 2 charts. And I do it, where is my, whoops, there it is. I'm going to give you guys plans. Hey, I'm brand new to the software. What do? I'll tell you what, here's a KISS plan for your chosen platform, a plan that only has 2 charts, that only uses 3 rules. And guys, this plan that I hand you is going to help you recognize advantages. That's the whole goal, is that you begin to recognize advantages. And then ultimately, those advantages become your trade. Chart reading, doing nothing. So we can say either, right? Sitting on our hands or chart reading is about 90% of the typical day, guys. There is so much doing nothing in the market. Maybe it's not giving you the advantages that you need, right? Maybe it's just, it's so psychotic, it's too fast to trade. But 90% of your day is spent in a calm, zen-like state, demanding that the market give you the advantages you need for your trade. 10% of your day will be spent actually trading, getting in, getting out, management, all that good stuff, guys. But once you learn to read your charts, if you go through this very simple, basic, remedial, don't make it too difficult process that I teach, you're going to understand 3 very important concepts. You'll understand where the market is likely to continue. You'll understand where the market is likely to go, and you'll understand where the market is likely to stop. Now, I say this without reservation or hesitation. Guys, everyone can hear me? Um, Hold on. Give me a Y if you can hear me, guys. We're good. Give me one more. Cool. It's definitely on your end. Use Task Manager to kill it. Full-blown Discord enema. And we'll see if that works. And guys, that's usually the easiest one. Not just shutting down and opening up, but going to Discord and making sure that there are no instances. Awesome. What's up, 10K? So guys, likely to continue. This is going to be ways to enter. So you're going to be able to look at your charts. You'll be able to say, okay, this trend is going this direction. If there's a blip on the radar, if there's a little bit of a fight or something, I'll know exactly where that fight is most likely to be lost using my methodology, and that becomes your entry, right where the trend is likely to bounce and continue. Where the market is likely to go, guys, you've got these amazing areas. Here's an example on NinjaTrader. Let's see, what is this, the S&P? You'll know about these lines long before the market ever gets to them. And you'll be able to use these lines to understand where taking profits makes a lot of sense when the rules are met. That's where the market is likely to go. And then finally, you'll understand where the market is likely to stop. Those same lines that are awesome targets become areas that could halt a trend, that could stop the forward progress, create giant untradeable bounces that ruin your day. You'll know where they are, and you'll know exactly how to recognize them, and then you'll have to make the choice, should you decide to, not trade directly into them. So we're going to use the concepts, guys, and we're going to take advantage of what the market does. The market goes up, the market goes down. Uptrends, downtrends. And guys, when a trend is established, we're going to say, cool, the market is going up. But I'm not just going to jump in, because there's almost always a fight somewhere in the middle of a trend, if not 10 fights in the middle of a trend. We're going to pinpoint, using our third rule, exactly where that fight is most likely to go and be lost. This becomes your entry, where the market is most likely to continue. And then when you take that amazing entry, we're going to hope that the trend resumes, and you'll be able to use key Fibonacci areas to define where the market is likely to go. And when they're reached, you can say, I'm not going to take that next entry on the fight, because they've already gotten to where they're going to go, and that area could reverse the market. Whether it is NinjaTrader or whether it is TradingView. First a trend, then a fight, then resumption. Guys, that's the plan. That's the methodology. This is the same stuff that Nexgen has been teaching for nearly 30 years. And you're like, 30 years? Nobody's been in this business for 30 years. Nexgen has, guys. Our first trade in the 2004-2005 plan was a trend trade. It was a downtrend. It was a fight. It was resumption. Knowing right where the market is most likely to go. Pretty cool, right? So you're going to get the 2026 version of it. I'm going to hand you rules. I've already handed you rules. I'm going to give you the ability to post in this room to make sure that you understand how to read your indicators. So you can take a trade, you can take a picture, you can say, Mark, I have no freaking idea what this line is. I need you to tell me. All you have to do is post in the room, and that's the first step in becoming a confident trader. It doesn't have to be a trade. It doesn't have to be a trade from this morning, guys. It could be something that you did last night. Post in the room and get feedback. Let's talk about what you see and what you did. The idea is that as you simulate, you're learning to follow a plan. You're learning to be rigid. You're learning to not deviate from a plan, because your plan, you're going to put the effort in to prove that this high probability trend trade does in fact win more than it loses. And you're going to have confidence and trust, and you're never going to want to miss it, and you're going to focus on the execution. I'm calling my shots here. So as you simulate and practice and get your feet underneath you, try not to practice the wrong rules. Now that doesn't mean don't make mistakes. We all make mistakes. I make mistakes still daily. I teach the classroom. But if you make a mistake, post it in the room. If you lose a trade, post it in the room. Those are the pictures that take you next level. Those are the pictures that start to get those bad habits out of the mix. So be bold. Put as many as you got in there. And then keep it simple. There's a reason that I call it the KISS plan. And these have both been dropped in the room already. This is the Ninja Trader, but both of them start with this. This plan is a stepping stone in your learning journey. It is designed to teach you how to read indicators. Guys, this is you learning remedial math. So one day down the road, you can be an algebra whiz. The trades in the plan are designed to optimize your chances of success, which means that when you follow the rules, the checklist to the letter, Nexgen has taken tens of thousands of pictures and countless hours of simulation and live trading, and we've been able to prove that the patterns in the checklist have the potential to win more than they lose. That's it. It's called an edge. And when you have an edge, the probabilities are in your favor. You will craft a plan tailored to your personal goals based on your experience reading the indicators. This is by no means a shackle to two trades in your life. This is by no means the only thing you can do with the software. What it is focusing on a pattern, a provable, testable, verifiable, repeatable pattern that you can say wins more than it loses. And then because this is going to help you learn to read your indicators, the high probability trend trade, everything else on your chart is a read. It's something that's happening around those rules, and some of them help and some of them hurt. And as you grow with the software, you will probably incorporate these reads into your plan. But until you can read and discern what's being told quickly, the high probability trend trade gives you the ability to take a trade that you can prove wins more than it loses, to focus on execution rather than result. The second thing, and this kind of goes into simplicity, is track your performance in the spreadsheet, guys. As you're learning and moving forward, I'll tell you in my own personal experience, I tended to not take pictures of losers because they pissed me off. And I tend to not post my pictures of losers if I actually took one in the room because I was terrified with the last name Novak of being wrong in front of a group of strangers. Just a little bit about me. Guys, by posting in the room, you're going to figure out what you did wrong. By using the spreadsheet that I give you, here's the one for TradingView. It's got a tracking sheet where you can post, you can talk about advantages, but most importantly, you're going to be able to put the feedback from class into that spreadsheet. And when you take a trade, sometimes the feedback is, man, that was perfect, virtual high five, gold stars, way to do it. Sometimes you're going to say, hey, you're messing up your entry a little bit by getting in too soon or too late. You're trading into areas, you're trading without those advantages. And guys, the feedback shows you the reoccurring challenges that you're having. And it shows you the victories, and it allows you to embrace and focus on the good while, I guess, admitting that not everything is perfect. But now that you know what it is, you can work towards avoiding it. I used to leave notes on my desk. This is your problem, Mark. This is what you need to fix today. This is your thing. And I did it because every morning I would go back to my spreadsheet. Every morning I would take the time to ask myself what worked and what didn't work. And every morning I would look at my results and how they correlated to the good and the bad. And oh, Wayne, I hope that's the one. Dang it. Hold on. Dang it. Hold on. There it is. Guys, every morning I'm doing self-analysis and I'm saying my rules were met. This was my result. And if it's a loss, I'm gonna go back to my rules. This is from Wayne. Wayne does one of the best jobs of self-analysis. And he doesn't just say, oh, the market hates me. He goes, let's see. Not quite enough stop loss. So when he takes this next trade, Wayne's going to say, man, I'm going to make sure my stops are in the right spot, not just where I think they belong. And he's going to be like, yeah, cool. I'm there. I'm good. Life is good. I'm going to be a better trader. And that's kind of the hope, is that you go back and do that study, guys. It'll set you up for the day. It'll set you up for consistency. It'll accelerate the learning process. But you're not going to know what rules you're breaking if you don't take the time to learn the rules, guys, and not just what they say, but what they mean. Like, I can say, yeah, I need strong triggers, but if I don't understand strong triggers, I'm going to have trouble identifying momentum. And if I can't define a termination, I'm going to struggle with whether or not I have a clear path. So, guys, learn these individually, because when a rule is met, it gives an advantage. And the recipe for a trade is the accumulation of all three advantages in order. And now my favorite picture in the history of pictures, those first two advantages, momentum and path. If you take the time to figure these out, to become an expert at these two concepts, you have a market that will be very difficult to stop, and there will be absolutely nothing in the way to stop it, guys. This is that trend that we're looking for with all the power. Momentum and path are your core. They will come into everything that you do. Your third rule is defining your trend trade entry. Your third rule is defining to pick off that fight, to show you where it's likely to fail. And guys, these three rules take two charts. So I always start with NinjaTrader because NinjaTrader's been around the longest. I will go through TradingView next. Guys, you have a large chart and a small chart. Now your large chart is this really slow moving chart. It's a very broad stroke of a brush, and it does show the overall opinion of the market, guys. It lets you know what the people in control want to do. It takes one bar, the most current bar, the bar that's printing first, has motion in it. It will define direction, momentum, and areas, guys. Rules 1 and 2. Having a market with all that force behind it and nothing in the way, that happens on the large chart before you ever go to a small chart. And when you go to the small chart, because the rules are met, the market is way down here and your fear of missing out is full tilt boogie. I know that it is. The small chart lets you see that fight. You don't see it on a large chart. It's too slow. So on the small chart, you'll see 15, 20 bars pushing up when everything says down. You'll also see areas inside of triggers, and that's where that fight's most likely to be lost. And if this is one of those winners, you'll also see continuation in the direction of the trend. All of this happens in one bar. That's it. And by using the smaller, faster chart, guys, you're going to have less risk and higher profit potential. Your accuracy is going to go up, and it's pretty awesome the way it all works out. We use two charts because there are forces in charge. It's not us. I don't care how big the chip on your shoulder is, the market doesn't know you exist. The market has no idea that your two contracts are there, and it doesn't care. There is a large crowd, if you will. Large crowd is your large chart. The men and women, the one percenters, the big business, the man, institutions. I don't care what you call them. When they want it to go up, it goes up. And when they want it to go up fast, they give you the advantage of momentum. And when they reach an area, they can let you know that's where decisions are being made. Maybe don't take that next trade. Guys, the large crowd wins more than they don't. That's why they're the large crowd. But there is a small crowd. This is your small chart. We love the small crowd, guys. We embrace them, we support them, we cheer them on because they create that little push, that small retracement where rule number 3 has you pinpointing where their failure is most likely to be imminent. And when the large crowd gives you momentum and path, guys, the small crowd loses 70 to 80% of the time typically, which means if you can just follow the rules and wait for that fight, you can put yourself in a trade that you will have proven typically wins 70 to 80% of the time. Pretty cool, right? Almost seems too easy. 3 rules, 2 charts. We're going to use areas. Here's your indicator run through. Areas are horizontal lines on a chart. Big or small chart, doesn't matter. Areas can create a bounce. Areas are bouncy. Guys, they all have names. There's a divergence high, Fibonacci resistance, yellow 1-to-1s. When the market is in an uptrend, you can blanket term these areas as areas of resistance. There's also Fibonacci support, divergence lows, and yellow 1-to-1s. And when the market is in a downtrend, you can blanket term these as areas of support. Areas can create bounces, whether it is large chart or small chart. We're going to use triggers to give us everything we know to be experts with these areas. Triggers have two parts. There's small triggers, and two lines working together symbiotically creates the small triggers. Two lines dashed creates the large triggers. Small triggers are fast, large triggers are slow. When they're green, they're up. When they're red, they're down. Small triggers and large triggers will work together to define momentum. Rule number one, strong trigger lines is actually rule number one. Small and large triggers, you'll count them at those key areas, and they'll let you know if an area may behave as a termination, having the potential to reverse that market. It'll let you know if that area has the potential to break. They will let you know if that area is broken. And then we'll also use the large triggers to define your perfect entry, guys, right where the market is most likely to retrace, to bounce off of an area and continue in the direction of momentum and path. Triggers show up in everything. Are there any questions before we break these rules down individually? Anyone need to take a potty break? Do I need to pull over? Get a Happy Meal? We're good? Cool, let's do it. Rule number one, guys. Large chart, big chart, slow chart, large crowd must have strong trigger lines. I'm going to change need to must have. This is a flow chart. If I don't have strong triggers, I'll never go to rule number two as a brand new user. But if I have strong triggers, then I'll go to rule number two. Strong triggers is the shortest, easiest lesson I could ever give. When the background is green, the trend is up. When the background is red, the trend is down. You can't take a trend trade if you're not following the trend. In order to have strong triggers in an uptrend, both small and large triggers must be green as well. In a downtrend, both small and large triggers must be red as well. So if the colors don't match with one another or with the background, rule number one is not met. That's like a little cheat code that makes it easy. What strong triggers is, what it is that when small triggers in an uptrend break above and away from the large triggers, and your large triggers are widening, you can see that the mouth is opening and pointed up. It's the space between the two. It's the gap. It's the separation that lets me know that the odds are favorable for the market to continue up. Looks like scissors open. They can cut you a check. In a downtrend, when the colors match, if the smalls break below the large, if the large are wide, angled in the direction of the trend, once again, the scissors are open and the odds are favorable for the market to continue down. And remember, it only takes one bar, the most current bar, to let us know that this rule is true or not. Separation on the first bar is strength. And then if separation is strength, a lack of separation when the small triggers find their way back inside of the large triggers, this is weakness. And now here the odds are favorable for the market to continue. With weakness, anything can happen up or down. This is where the market doesn't have the drive or the push to feel confident that it's likely to continue in the direction of the trend. This is where you'll see reversals from the middle of nowhere. This is where key Fibonacci areas are most likely to hold, guys. So when you look at your chart, the first bar, if you can see daylight between the small and large, you have strong triggers. And even a small little gap is just as efficient as a big gap. The first bar defines, and large and small work together to create that best of the best look, guys. It has absolutely nothing to do with these price bars. It has absolutely nothing to do with those areas. It is simply separation is strength. Is everyone good with that? That's typically a pretty easy lesson for most. Smalls are inside of the large on the most current, well, let's see. There we go. That's the most current bar. Smalls are above the large. There is space between. Can you give me a Y in the room if you're brand new? Guys, that's odds favorable momentum. That is the best look. That's the look that says, hey, the odds are favorable for the market to continue up. But that's only one rule. The next rule says don't trade into an area that can stop the market. A termination condition, the technical definition, is a Fibonacci-based indicator that may reverse the market. Guys, a termination condition is going to be a line on a large chart. And this is where the large crowd makes decisions. And this is where the people who control the market are likely to buy and likely to sell and likely to fight one another. And when they get to these areas, the decision-making process is on. Your trigger lines from the Latin bouncy thing. Thank you, Ron. Somebody gets it. Your trigger lines are going to tell you the story. So I embrace language a lot, guys, and this is what I want you to remember. When price reaches an area of resistance, that means a horizontal line in an uptrend. All you have to do is ask yourself, where are my triggers? And if price reaches an area of support, once price gets there, we're done with price. You're going to ask yourself, where are my triggers? It's important that you do that, because if none of your triggers, all four lines, remain below resistance or above support, you have reached a termination condition. And I'm going to tell you right now, every line you reach in the market will be a termination condition, at least for a moment. So price reaches, none of my triggers get through, absolutely no trades into the area. And all it says is don't initiate a trade hoping that area breaks, because there's three options that are going to happen at that area. The first one is they're going to disregard it like it didn't even exist and smash through it like they were getting paid to do it. That's one option that could happen, which is why when we reach an area, we don't arbitrarily sell. The plan says no. It could also, when the large crowd gets there, set off a fight between the buyers and sellers of the large crowd. You're going to see this right at key Fibonacci areas. You're going to see those reactions. And you don't want to be a part of that fight. The likelihood of you winning is virtually none. And then it could also, this is my favorite, it could reverse the market completely. It could send it careening in the other direction. And if it does that, we call that a strong top or a strong bottom. And when you have a strong top or a strong bottom, any trade that you find on the other end of it has a higher chance of winning, because the decisions made by the people in control were so impactful that they couldn't get through that area, that it reversed the market. So guys, we're going to let the large crowd get there. And if none of the triggers break, it's okay to sit on your hands and do nothing. And if it's going to break, it won't be price that tells you it's broken. It won't be the color of the fib that tells you that it's broken. It will be the triggers. And if no triggers are through this area of support, as they are not, your highest chance of success to keep you active in this game the longest is to simply sit on your hands and wait for the reaction, to do nothing, to relax, to say, I don't have to guess. And if two of your triggers smash through with momentum, remember it's a flow chart, we wouldn't even be looking for this if it wasn't for momentum. Guys, you can say to yourself, because the smalls have absolutely smashed through that area, and my large triggers are still above, 50% through, 50% not, I can say this area has the potential to break because of that momentum. And trades can be taken, but they must be managed assertively. On the KISS plan that I give you, you can optimize your chances of success with these breakouts by allowing 3 of the 4 trigger lines to get below support. That's your best look for a breakout. And when all 4 trigger lines, both small and both large, get below the area of support, support is now broken. Your path is now clear. Rule number 2 is now met, and you'll find that support turns into resistance, which is pretty cool. Very often those pullbacks go right to a broken area. So first it's a term, then it's potential, and then it's a clear path. It's all about counting triggers. And guys, I gave you this PowerPoint, so you have all of these pictures. No triggers, no trade. 2 triggers, potential, but not your best potential. 3 triggers, better potential. Let's manage assertively if we see an opportunity. 4 triggers is money. 4 triggers is the best of the best. 4 triggers is the clear path. And guys, the easiest trades that you ever take with this software, and I say this again without hesitation, I've gotten cocky in my old age because I've seen it enough, will be when the market breaks through resistance and you have momentum and room to the next area, or when the market reverses from an area and you have momentum and room to the next area. These are the best of the best, the easiest, the highest probability, the ones that take a little bit of patience to wait for, but the ones that typically deliver the best results. So when you have momentum and path, you're going to go look for an entry. But I have to give a little warning before you do. There will be times when your path isn't clear because areas are stacked, and there will be times where you don't have the momentum that you need. And guys, this is 90% of your day. 90% of your day is being patient, is being so in tune with your plan that you demand that the market give you what you need to ever consider pulling the trigger. But the futures markets trade on average $220 billion hourly collectively. The S&P is around 174 million a day. The NASDAQ is up closer to 270 million. Guys, it takes $400 a day to put yourself in a 6-figure income. You don't need every move. You don't have to be the first in or the last out. You don't have to hope areas break or that weak triggers push the market. Focus on your rules. Your rules are designed to give an advantage. So here's our S&P. Let's do a big snapshot, because rule number 2 was like a gangster earlier. Check it out. Let's start, oh my gosh, consolidation from termination to potential that didn't, to termination, to termination, to termination, to potential that didn't, to potential that didn't, and finally the breakout. Rule number 2, keeping you out of the fight. Rule number 2, keeping you out of consolidation. When Fibonacci support breaks, it very often gets tested as resistance. Pretty cool, right? With weak triggers at a fib, there's a giant bounce right back to retest support. We're witnessing another fight, ultimately a breakout. 3 triggers through. It does break, becomes support. Weak triggers, retracement all the way to resistance, where they come back and react at support. Push down to Fibonacci support damn near to the tick, where they retrace to resistance, where they can't seem to break support, only 3 triggers through, and that was where the up started, back to support from 1 to 1s. And guys, you're saying to yourself, how am I ever going to make money? How am I ever going to make money if these yahoos can't get their poop in a group? Right there. With momentum and path, we're going to pinpoint the best entry. With momentum and path, we're going to find a way to capitalize. And we're going to do it with these tails. We don't trade the tails. Guys, those tails are the pullbacks on a smaller, faster chart. Those tails, look at them go. Support, resistance. Holy smokes. Again and again. And there's our most current, coming right off of an area of resistance with the triggers that didn't break. With the reversal, that's a strong top. But we're also dealing with a strong bottom. We're witnessing the fight between buyers and sellers. I don't know about you guys, I'm floored by Fibonacci. This was my biggest problem in the beginning, trading into it, losing those trades, until I learned that magical phrase. Price reaches where are my triggers. Saved my life. And now that we have momentum, is everybody good with momentum? Separation is strength. Is everybody good with termination conditions? Price reaches, where are my triggers? Cool. Language. Language is important. Rule number 1, separation is strength. Rule number 2, price reaches, no triggers through, no trade. Learn these. Rule number 3, and again, the language will foster success. Rule number 3, I just gave you guys that one. Print it out. Rule number 3, I'm going to use a limit order to buy or sell a pullback in an area inside of triggers. If you learn how to say that without thinking about it, you won't miss your trades. If you learn how to say that without hesitation, you're going to know exactly where your trade is coming from long before the market gets there, guys. The limit order means that we're going to wait for the market. We're going to wait for that fight to come to us. Buy or sell a pullback means that we have to let the market go counter trend for a little glimpse. And then we're going to do it in an area because areas are bouncy. And those areas will be inside of large triggers. Large triggers will show you exactly where the bounce is most likely to happen. And your entry pattern is just that. It's a pattern. If you're following the rules for the trend trade, your entry is going to look the same every time, guys. When the momentum is up, when the path is clear, you're going to wait for the fight. And the fight begins with a reversal bar. The reversal bar signals the beginning of the pullback. It's not your entry. It says, hey, let's go pinpoint where that fight's most likely to go. And that's the large triggers. You have 2 sets on your small chart, one from the small chart, one from the large chart. These triggers define where the market is most likely to retrace. The areas inside define where the market is most likely to bounce and continue with the large chart direction. Guys, sometimes there's multiple areas, creates a window of opportunity. Some people call it the woo, the Ric Flair fans. Guys, your rules say activate a limit order just above the highest point of support and wait patiently. They're either going to come get you or they're not. And I took a picture of it this morning and dropped it in the room. Where did it go? There it is. When rule number 1 is met, strong triggers. When rule number 2 is met, 4 triggers below, I can pinpoint exactly where the market is most likely to bounce and continue in the direction of the trend by identifying the area inside of triggers, guys. This is exactly what it looks like. And sometimes those jerks don't come get you. That's just a part of trading. But it's the same every time. Reversal bar. Triggers define the retracement. Areas define where it's likely to bounce. And guys, anything below those triggers for a long trade, typically 4 or 5 ticks, that's where your initial stop goes. That's where rule number 3 is no longer helping you. This is where you cut ties with what was once the perfect opportunity because it no longer is. 4 to 5 ticks below the triggers. You'll learn to ignore lines below because once you get below those triggers, you don't know if, when, or where the market is likely to stop. In a downtrend, it's no different. We just flipped it on its head. Reversal bar signals the beginning of the pullback. Trigger lines define where that retracement is most likely to go. Areas inside are most likely to create the bounce to send the market back in the direction of the large chart advantages. Anything beyond those triggers is where the market shouldn't go. That's it. That's where stops are placed. That's where we cut ties with the trade. That's where we say anything that wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And guys, it's not a failure. It's simply a great trade that didn't work. And every 10 trades you take, if you're following this plan to the letter, you're probably going to get a hickey 2 to 3 times out of it. Victor started paying attention to a single bar, and you can literally see the fight of buyers and sellers in one bar in wicks. Long wick on the upside, buyers trying, but the bar ends up red. Sellers winning, same thing the other way. It's fun to watch. You're absolutely right, Victor. And Victor's talking about TradingView, and Victor's saying you can literally see where the sellers tried to push down, and the buyers told them, hell no, we're going the other way, inside of one bar. If you refine it down a little bit, you can see that same fight on a smaller scale. Sellers try to push down. They hit a key area. The buyers knew about the key area, and look at their reaction. Pretty cool, right? Zing, bang, boom. And now the buyers are at a key area. What's the reaction going to be? I don't know. But my rules say don't trade into that area. Guys, everything is patterns. And Victor, that's how I think about it. I think about the market as a fight, and I don't have to be in it. I don't have to be the first one in or the last one out. I've got to wait for my pattern because my pattern has been proven to win more than it loses. My pattern has been verified that when the rules are true, probabilities say I'm more likely to win than lose. And it starts with momentum. And if I have momentum, guess what? It's going to be hard to stop the market. And if I have room to trouble, guess what? I've got room to make money. And if I simply wait for the fight, pulling back to the area inside of triggers, I've got the least amount of risk and the biggest amount of room to get back to trouble. And guys, this is it. This is your pattern. Whether it's November of last year, whether it's 2021, whether it's 2022. If you go back and look at your tracking sheet at clients' trades, you're going to see this pattern 400 to 500 times. And you can use those tails on a large chart to go back and practice this pattern, to see that it's true, to watch how it all comes together to create the perfect trade. And I think we circled one of those tails, right? We'll do this one too. We're just going to look for the entry pattern. Momentum and potential to break. There's one of those tails. I'll circle it. Didn't we have another one? Wow, this market's cranking, isn't it? I thought we circled another one. Momentum. So watch this. When you circle those tails, the tails aren't your entry, guys. You can literally predict where those tails are likely to form by using the refinement chart. So scroll back. Pull back right to the area inside of triggers with all that momentum and the potential to break. Sure enough, it goes right to the next key Fibonacci area where now the market has reversed from an area you knew about long before it got there. Back it up. Here we go again. What is that, 842? I think I watched this one happen live and took some pictures. Pull back to an area inside of triggers. Do you guys see it? Pull back to an area right inside of those triggers. I mean, I can't make this up. This is from today in the S&P. If you learn these patterns, if you learn the language, you'll say, look at the momentum, look at the path, look at the pullback to the area inside of triggers. Let me put my stop where the market shouldn't go, and I'll just let the market do what the market does. It's either going to go up or down. It's either going to win or lose. My stop is defined. Actually, your stop would go below that reversal bar. Once it printed, there's your first target. I'll go break even. Second target is set at $200. It may not make it because of that big fib. I may choose to pull it just a little bit closer to make a little bit of money. Does everybody see it? That's the high probability trend trade we just talked about live in front of you, start to finish. Oh my gosh, drop the mic. Gotta learn the pattern. What's up, chef? I love it when you guys still hang around. That was good timing, right? Guys, that was a beautiful trade. I hope somebody other than me caught it. Let's go to TradingView. What is TradingView? It's just another platform to run the T3 indicators. That's all it is. On TradingView, I've given you a plan. The plan is a stepping stone in your learning journey. The plan is designed to optimize your chances of success as you learn to read your indicators. The plan is the beginning, and through study, simulation, class feedback, and practice, you'll write a plan that suits your needs. This gives you the core for consistency so that you can incorporate your chart reads. Your trend trade is only 3 rules. That's it. 2 of the rules are exactly the same. Don't trade into anything, and then go pinpoint the fight. It only takes 2 charts, big chart, little chart. Why? Because you're not in charge. Ooh, you know which one we're going to show who's in charge? This guy's in charge. Actually, this lady, if you know marine biology. This is your apex predator. This is the big money investor. This is the trend creator, the momentum establisher, the area reactor. This is Norbert. Our job is to be the remora. Our job is to not jump in front of this death machine and hope that we can get to the tuna first. Our job is to let him do all the hard work so that we can thrive in relative safety. Guys, you're not in control. So let the 15-minute lead the way. It's a big, slow chart. It is a broad stroke of a brush, guys. You're going to use this 15-minute chart to define direction, momentum, targets, and terminations. You're going to let it tell you what's going on in the market. Your 1-minute chart, guys, this is still a slow chart. A minute is a long time. When we take a break, everybody in the room, try to hold your breath for a minute. Half of you won't make it because your lungs are not where they used to be when you were 12. Guys, a minute's a long time. So we're going to use it to define the immediate strength of the market. And we're going to use it to pinpoint right where that fight is most likely to be lost, guys. On your large chart, you have small triggers. You don't even need large triggers on your large chart. Some of you have them. I don't know why. Small triggers. They're either up or down. There's no large triggers. There's no background colors. Guys, I am like Remedial 101, right brain, keep it as simple as possible guy. And all those other indicators create distraction and opinion. You don't need it. I'm telling you right now. Your small chart will have small and large triggers because the second trade on the plan that I give you is what's called a momentum trade. And in order to take a momentum trade, you must be able to define momentum using small and large triggers, separation of strength. For the trend trade, you only need the small triggers. And I can tell you that there's a lot of people in this room that have even pulled the large triggers off of their entry chart because they're only taking trend trades. Both charts have areas. Guys, the T3 indicators are unbelievable. They are respected by the people that move the market because these areas are created by the people that move the market. We just found a way to make them pretty. Whether it's one-to-ones, divergence highs, divergence lows, outer bands, mid bands. Go through and read this. Know how these areas can be used. But they can all create a bounce, large or small chart. And now we're going to break down the trend trade, guys. The first rule says don't trade directly into areas. The second rule says seriously, don't trade directly into areas. I can't stress this enough. The third rule says buy or sell a pullback at an area with a close on the weak side of the triggers. Guys, your entry is very precise. Your entry, you'll know where it's coming from long before it gets there, and then you'll wait for one little key factor, close on the weak side of the triggers, that says, yes, you're on the good side of the immediate momentum. Let's make this happen. So, defining trend. Large chart. Small triggers are either up or they are down. That's it. So my trend is either up or my trend is down. If I can't tell what the market's doing, if I can't tell if those triggers are trying to go up or down, it means that they can't tell what direction the trend is. And if they don't know which way they're going, how are you going to go with them? So let it be decisive, up or down. Rule number 1 says 15-minute not trading directly into areas. What does that mean? It means that with these triggers up, from right here, if I enter a trade, I better have room before I smack headfirst into something that could create a bounce. That's it. You don't have to overthink it. If I'm looking for a short trade right here, I have to have room before that market reaches an area that creates a bounce. Is everybody good with that? It almost seems too simple, right? So the triggers are up, and my large chart is literally at an area that could create a bounce. Rule number 1's not met. That's what it looks like. That was very timely. Rule number 2 says, from wherever you're going to take that trade, from wherever you're going to enter that market, whatever area is going to produce your entry, don't trade directly into an area. So what does that mean? If my entry is directly into resistance, resistance is more likely to ruin my good time than it's not. And if my entry is directly into these these pink 1-to-1s, those are more likely to ruin my trade than they are to help it. And that area of resistance is the same, and that area of support is the same, and that area of resistance is the same, and I want room to make money. So from wherever I enter, I need to have room to make money. And then it's just a matter of pinpointing right where the market is most likely to continue, guys. And it's the same look every time. It's the same pattern every time. It is establishing a trend, waiting for a fight, and hoping the trend resumes. So it looks like this every time. In this picture, we're taking a long trade. The trend is up, and the small triggers on the 1-minute chart turning down. That signals the beginning of a fight, not a reversal bar, because you'll see reversal bars all the way up. It is the small triggers rolling down. And as soon as the small triggers roll down, I'm going to put a box around really all the areas below it. And I'm going to say any one of these could create a bounce and send that 1-minute chart rocketing in the direction of the large chart direction. But when I get to an area, if I don't get a close on the right side of the triggers, that area's off the table. And when I get to the next area, your entry is a super specific look. Boom, 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 boom. Because we're taking a long trade, you're waiting for an up bar. You're waiting for a green bar. And you're not just jumping in arbitrarily on a green bar. You will learn to force that bar to close on the weak side of the triggers, above those small triggers that are coming down. And what this does is it keeps you from fighting that immediate momentum right at an area, and that look is where the market typically continues in the direction of the large chart. It's a small chart reversal. When the small triggers roll up here, signaling the beginning of the pullback, it's no coincidence that it is a down bar that closes below the triggers that begins the push to the area. So weak side of the triggers is where the market tends to reverse. And we're just going to use it to capitalize so that we can get in line with the large crowd. So when the small triggers are up, the trend is up. When there's room to trouble, then and only then will I go look at my small chart to make sure that from wherever I choose to enter, there's nothing in the way. On the small chart, just like on NinjaTrader, guys, it's going to be so far away you're going to panic. Oh my gosh, I'm never going to get into this trade. And then the small triggers roll and you're like, oh, here they come. Where are they most likely to pull back to? Those yellow dots are the first thing that could create a bounce. And when they get there, it's an up bar that finishes above those small triggers that gets me in. And sure enough, that's where the market continues with everything happening on the large chart. And guys, this is a good look right here. Do you see how they tried to head fake you before they got to the area? They pushed down and almost got there. They said, oh, look, here's a close above the small triggers. But it's not from something bouncy. Guys, don't fall for it. Trades originate at areas because areas create bounces. Small chart, or I'm sorry, large chart says down. It's easy. The triggers are down. I'm going down with it. There's nothing in the way. I've got a clear path all the way to trouble. My small triggers turn up and I say the retracement is on. Let me look higher. Let me look for a mid band, for an area, for 1-to-1s. Hell, maybe the next area. I don't know. But when I get to that area, if I get a down bar that finishes on the weak side of those triggers, below those triggers, that is my entry. That is exactly what gets me into the market. That's where the market is most likely to continue in the direction of the large chart advantages. Guys, your trend trade pattern is the same every time. Starts on the large chart. Triggers are up. From wherever I am, do I have room to trouble? I've got about 10 points. That's $200 for contract. My small triggers rolled down, so I wait for the pullback to support. And if I got a close above the small triggers right here from 86, I've got about 12 points to get back. And as they pull back, now I'm at support and I'm looking for an entry. Didn't get a full bar below. This is still behaving as support. A close above just doesn't give me a lot of room. But guys, this is how it works. I've got 50 seconds until I know whether or not the rules are met. So I just sit here and I watch the countdown. And I've got 39 seconds. Boom, boom, boom. Let me do this for you. Let me make it as easy as I can for you. Bonk. Here's the link to the workspace. Just click on it, copy it, and it'll set you up 100%. And see how there's no entry, right? No rule met. And sure enough, I don't arbitrarily get in a line hoping that it holds. I'm waiting for a very specific look. 9, 8, 7, 6. Doesn't look like it's going to give it to me. 4, 3, 2, 1. No rules met. And I didn't take a loser as this market goes rifling down. Pretty cool, right? Guys, this is what it is. It's one look. It's 3 rules. It's 2 charts. Learn the very basics, and you'll start to see more. Learn the very basics, and you will write a plan that suits your needs based on your ability to read those charts. Let's talk management. I'm going to talk about it 2 ways. First, I'm going to talk about knowing what you're up against. Guys, when you look at your small triggers and they say up, you're going to look at wherever the most current price is in relationship to those triggers, and this is going to help define the momentum of the move. You will either be left of, right of, or inside, whether the market is going up or down. Left, right, or inside. There's really the only 3 options. If you are left of the small triggers, this is the strong side of the triggers. This is where the market tends to push further. This is where 1-minute areas have the highest chance of breaking. Guys, this is their big move look, more often than not. If I am right of the triggers, I'm on the weak side of the triggers. This is where, no worries, Wayne, just let me know when you get back. This is where 1-minute areas are most likely to bounce. This is where the most aggressive management is going to take place. Weak side doesn't mean don't look for the long. Did it work for you, 10K? Because in 15 minutes, you can go from weak to strong. Weak side says get your management hat on. And if you're not strong or weak, if you're in that transition, this is where like splitting targets is great. This is where getting paid at the first sign of trouble is awesome because you can go from transition to weak. Go and break even because you can also go from transition to strong. Maybe there is more in the trade. But if you learn this little lineup right here, it sets you up. You're like, oh, I already know how I'm going to manage this before I ever enter the trade. And then one more thing about stop placement. And this is in the KISS plan, and it tells you, guys, when the trend is down, and this is the premise for stop placement pretty much on everything we do. When the trend is down, we're waiting for the fight up. Our entry is where the fight fails. Initial stops for a trend trade are placed above that failure point because the buyers tried and lost. And we're saying if they try again and win, it means they're going higher than this. I don't want to be in it anymore. So you'll know exactly where your stop needs to be placed. You'll know exactly what your risk is going to be. You have to learn to accept risk. And guys, that's it for me. That's the first hour. Look at that. Never gives an entry. Pretty cool, right? Red news in 2. I love red news. What does red news do? It can disrupt. Uh-oh. Did it happen again? Did they really do it? Momentum and path. Son of a gun. Just outside. Just outside of those triggers. Doesn't fit my rules. Doesn't fit my rules. All right, guys. I'm going to leave you with news. I'm not going to auctioneer it today. I'm going to go refill my water real quick. When I come back, we're going to start looking at all the charts that were posted. And when I look at them, I'm not going to be the trade police. Not my job. Don't want to do it. Don't need that burden in my life. So when you post, I want you to talk about the rules. I remember Jolt Soda, Jeffrey. I want you to talk about the direction of your triggers on TradingView. I want you to talk about where you are in relationship to those triggers so that you can start working on your management. And I want you to talk about whether or not you had room to your targets. I want you to address these three things. Probably, Phil. And then I want you to use the language. Small triggers rolled up, so I need a pullback to an area and a close below. And guys, what you're doing, whether it's NinjaTrader or whether it's TradingView, if you take the time to discuss the three rules, if you write them on the chart, you're creating a neurological connection between what your eyes see and what it means to you. And if there's a problem with your read, it lets me know that we can take corrective active action instantly so that you don't build your own truth. And when it's the perfect trade, you've literally written the recipe for the perfect trade. Strong top, two triggers through, pull back to the area inside of triggers, down it goes with news. That one doesn't fit the KISS plan. For a lot of you, you're making a tremendous amount of money on this short trade right now. Guys, I'm going to go take a few minutes. When I come back, nothing but chart reads for the rest of the day, answering every question that you have. Shy people go hungry. That's what my father has said every time I visit him for the last 30 years. Are you hungry? I'm good. Well, shy people go hungry. Guys, shy people don't get the educational benefits. I don't know what you need if you don't tell me. It's like dating. All right, guys, I'll be back in 5. All right, guys, here we go. Smoke break. No, not anymore, huh? Um, I need to see the ICC method and FVG method together. I don't know what that means. Kezi, the one, help me out here. You guys throw acronyms in here, and I don't know what they mean. Um, so if you'll tell me what those are, maybe I can oblige. All right, guys, I'm going to scroll up to the top. And just so you know, I have to scroll, oops, up to the top of the chat box to get to your pictures. So if I miss a picture, it's not because I'm mad at you or don't like you. I just missed it. And it's never intentional. Never, ever intentional. So I'm going to start clicking. I'm going to skip Wayne's because he's out doing stuff. And guys, remember, I'm not the trade police. My job is to just help you get to wherever it is you're telling us you want to be. And what we find is that the path of least resistance is building a really solid foundation, learning how to look for advantages and then turning those advantages into opportunity. And as we go through pictures, you're going to see a lot of trades in here that are not high probability trend trades. You're going to see a lot of trades in here that might even be counter trend. Meanie Mark, am I being mean? I will. I'll rip a new hole if need be. All right, guys, here we go. Tick rich environment. Buy order halfway would have done the trick. Anyway, 3 trades, 725 for today. This should have been entry. 15-minute zone moved south. Synth fibs don't move. I moved my entry away from zone fibs. Wasn't necessarily stopped out negative 20. So Paul, man, you keep comparing your new girlfriend to your old girlfriend. The zone shifted. My old zones didn't shift. My fibs didn't shift. Dude, these do though, right? Don't get hung up on what used to be. Be in the now. And I'm not even sure if he's here. Guys, these zones are supply and demand. They will recalculate as it is necessary. Your fibs will do a fib update. They will stop printing. They will start printing. And that's a part of it, guys. The market isn't an absolute never changing thing. So if they move, there's a reason for the move, right? Even if it's inconvenient. But you're absolutely right with everything down. There's your pullback. There's your close below. There it is. You choose to get in late and you get stopped out. Because when you jump in the middle of nowhere, it doesn't change where your stop belongs. Your stop goes behind the failure. So if you jump in late, you increase risk. And if you jump in late, you reduce profit potential. And that's just kind of the way it goes. So, Paul, it's a great read. Great read. And now here comes the most boring trader in history. Peter, you in here? So, Pete loves momentum, odds favorable momentum, and you watch his charts, and like everything that he does stems from having that first advantage. And then he'll say, 3 triggers are through, there's room to trouble, I'm going to jump the fudge in based on momentum and room to something bouncy, and I'm going to get out at bouncy, and I'm going to jump out when momentum goes away. And guys, momentum and path really sets the tone. Momentum and path will open the door for more. It really, really will. First, it's momentum. Then it is room to trouble. And then it's jump the fudge in. Go to trouble. And this is actually a pullback to an area inside of triggers. He just waits for confirmation, makes him feel better. That's his right. But everything is screaming south, and sure enough, the market goes down with it. If you learn momentum and path, you'll probably find a way to capitalize beyond the high probability trend trade. Strong trending market means 30 plus bars, no reversal bars, small triggers riding the large. Momentum is assumed. Path is clear. Pete jumps the fudge in, gets paid, and then it comes back and retests that fib that used to be support as resistance, and Pete says, whoa, let's get below bouncy things and jump the fudge in again. And let's make more money. And guys, Pete's been with Nexgen for like 10 years. And he started from the high probability trend trade, and he built a trust in momentum, and he began to recognize when things could create bounces. So he also knows when to stay the hell out of the market. That's what experience does, guys. And until you build those reps, until you learn how to get a little more creative, what do they say? Learn them like a scholar so you can break them like an artist. Know where to go. He knows it. He does nothing because it doesn't cost anything to do nothing. Trend trade. The trend is down. Strong side of the triggers. Room to trouble? No. A clear admission of guilt, right? Guys, this is his trade. He says, I'm in a zone. With all the advantages on the large chart, which is funny because you're directly into a zone, the advantage. I felt safe entering this trade. One thing I did not notice was that the triggers, even though they were both down, are on the wrong side of the small chart. I'm not sure exactly what that means. Could have been better if I did not make a mistake clicking the wrong button, but it was also a risk being in the zone on the large chart at entry. So triggers are down, strong side of the triggers, no room on the large chart. He sees the fight, he gets the pullback, he grabs the close below, and he says, you know what? 2 out of 3, I'll take this trade and manage. But because it's only 2 out of 3, I'm a GTFO at the first sign of trouble. Great trade, Victor. Good job using your chart read to find a way. And then it's the same look. Triggers are down. Strong side of the triggers. Room to trouble. Pull back to the area. Close below. Get in. GTFO. Make a little money. $915. When you get mad about $900 trades, you know you've got a good plan. Hell, when you get mad about making $300, you know you have a good plan. Victor, 2 great trades, 2 great management, 2 wonderful results. Everything is down, I'm assuming, waiting for it to get here again. Either I get a zone or a mid-band to consider another ride on the sell side. That's it. I love that. Just waiting. I know where my trade comes from until it gets there. I'm on the fence. All the momentum, room to trouble, jump the fudge in, out of trouble. That's it. Momentum, base hits pay bills. I love that. Base hits pay bills. Watch this. This is my account. My first trade, I made $110, and everyone's like, boo, $110. And my second trade, I made $110, and boo, how's he going to be a millionaire if all he does is take 110? My third trade, I made $110, and my fourth trade, I made $110. $440, that's ridiculous, Mark. How are you ever going to buy a Corvette and impress girls with that? Well, if I do that every day over the course of a trading year, I'm at a 6-figure income. Maybe I mirror those results on 5 accounts. Now I have 2 Corvettes. Some prop firms, some people let you mirror it on 20 accounts. The same $440. Exactly Washington 300. That's where money's made. That's where money's made, guys. Base hits pay bills. Has everyone seen Moneyball with Brad Pitt? Ladies, you're not going to want to miss this one. It's Brad Pitt. Moneyball, where the Oakland A's or Anaheim A's or whoever it was at the time, guys, they built a whole team around the idea that home runs aren't what you're looking for. Getting on base is what gets runners across the plate. And they had a fraction of the budget and missed it by a game, which was pretty sad. That pissed my brother off. But guys, your account doesn't know how it got there, whether it's a small trade or a big trade. It's about taking the right trade. When a termination stops the market, when divergence prints, Ron says, man, they're probably going to continue back up and retest because I sure as heck can't go short. And he finds a way to make money. Great job. And when everything is up and there's nothing in the way, he finds a way to make money. Super Bowl tackle, base hits pay bills. I love it. Guys, trading is about advantages. Trading is about having an edge. And however you choose to use your edge is your right. But first you have to start talking in terms of advantages. A trade, the best trade, the perfect trade, the high probability trade is taking momentum, path, and defining your perfect entry. And here's the cool thing. You ready? All right, I don't know why I say you're ready. You're getting it no matter what. Momentum, path, defining your perfect entry, even if it's not a trend trade. Defining your perfect entry, having a mechanical, pragmatic, rules-based approach to your entries because you know this look produces more winners than losers. So when I have the perfect look, I don't hesitate. And a high probability trend trade is defined as when each indicator on every chart agrees with the rules for the trade. And once you start talking in terms of advantages, you'll notice when one of them goes away. And you'll say to yourself, well, most of my indicators line up with this trade. However, a small issue exists. A third of my advantages are gone. I can still choose to take this trade. I can manage this trade a little more assertively because I know that it's not perfect. And when you start to see them really go away, you may choose to do nothing, guys. You're in control. The only thing you will ever be in control of is whether or not your rules are met. But when you know what's working for you and against you, it helps you make decisions not only on entering, but how aggressively you may need to manage it. And Ron just said my mantra. Good entries make manageable trades. Great entries reduce risk. Great entries increase the room to trouble. Great entries produce manageable trades, guys. You're learning how to take great entries so you can find a way to make money with those great entries. Boaz, momentum down, 2 triggers through, and it pulls all the way back to the highest area inside of triggers. And man, you got lucky, right? Because it blew right through. And let me show you how Boaz reversed engineered this. Boaz says, I'll take this entry because the large chart has momentum and the potential to break. And Boaz says, if the chart pulls back to resistance and every one of my triggers is below resistance, resistance is more likely to stop that market and produce a bounce down than it is to break. That's all it is. So Boaz probably put his stop 4 or 5 ticks above the fib he was hoping would hold. And man, that's terrifying. It really is, especially after a second higher divergence. And Boaz, this is one of those times where you can say, uh-oh, things may be going wrong. I choose to exit, but because of the advantages, I can pop right back in on a reversal bar, take a little hickey, maybe a couple ticks, but now I've got a place to put my stop. Now they're back in the direction of all the advantages. You sat through it. Great exit. Awesome trade, Boaz. And did you get my email yesterday? Did you get my reply about the TradingView stuff? And did it make sense? Even more importantly, I suppose. 2 triggers through. 3 divergences. So potential to break, but not great potential. 3 divergences says absolutely no more trades. So Ron enters and says, we're probably going to get a push up. Let me make a little money. Nice job, Ron. So I can't go short. My rules aren't met. I definitely can't go short. My rules aren't met. Hell, I'm going to try to go long. That's experience, guys. That is experience coming into play, finding more opportunities from a very, very basic plan. Nicely done. Boaz, momentum, nothing in the way. That was the momentum trade, and it got you in just a shade late. But with momentum and path, easiest money you'll ever make, isn't it, Boaz? When the market is absolutely railing in a direction and there's nothing in the way to create a bounce, it's crazy how confident you get with what you're doing. Great trade, Boaz. And again, did you get my response to your email about the things on TradingView? Okay, did it all make sense? That's what I really want to know. I had never even looked at it. So guys, some of you on TradingView have a little drop down right here. Some of you don't. So Boaz, what it is if you do a preset, if you click trade, and over here, like I'm going to say, okay, where are we going here? I'll take profit here. I'll put my stop here. I can say, you know what? Let me turn this into a preset. And let me figure out how to do this real quick. Okay. So if I click buy, that's not it. You got to, oh, there it is. Take profit, stops. I can put it all in place. And then, Boaz, if I like these settings, I can save the order as a preset. Let me make sure. Oh, that accidentally entered, so I can't do it yet. Hold on. Close out, close out, close out. So I can set this up. If I'm going to buy, this is where I'll take it. If I'm going to stop, well, stop order has to be lower. And I'm not sure why that's doing that. There we go. I can save it as a preset. Come on, save it as a preset, please. And if you save it as a preset, unlock trading settings. Anyway, if you save it as a preset, and I'm struggling right now, and I don't know why, it'll give you the drop down up here, Boaz. And then every time you want to take a trade, you can just use the drop down. Let me see what I'm missing for the preset. Let's do it as a sell. So I'll make my profit. Oops. And I'll make my stop loss. Cool. And now it's still not letting me do it, and I'm not sure why. So Boaz, I apologize. I don't ever mess with this. I'm trying to. I can figure it out, or even better, since I'm never going to use it, you can figure it out. But that's what happens. When you create presets, it does the drop down from the side, and then you can put those in instantly. I don't trade with brackets like that. I will literally just sell the market, and I'll put my stop where I want it to be, and I'll put my target where I want it to be, and then I'll let that bad boy run. Good stuff. Did you guys notice that I don't have any trigger lines on my chart here? That's probably a bad thing. So I'm going to reload and see if we can get some trigger lines. All right, Nathan, let's see what you did, my friend. Open link. Open link. Boom, 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 boom. Not a lot of pictures today. Has the market been kooky crazy, guys? Usually have more. F5. F5 10K. Just click on your chart, F5, it'll reload everything. Whoops, I missed the 5. Mini NASDAQ is, then that means that the big NASDAQ is too. Strong bottom, odds favorable, pull back to an area. Should I consider this one to be a lower divergence? Still in play, isn't it, Nathan? Do you see it? It's still in play. Hell yeah, that's a divergence. There's your second. There's your third. There's your fourth. Great question. Could you explain again how to know if this divergence is in the same spot? Cool. So rule of thumb, and I don't even know if that it's a rule of thumb. Um, in order to do this on the small chart, Nathan, I incorporate the idea that divergence is a line that can create a bounce, right? So when my small and large triggers get above that line, I consider that line broken. And when my small and large get above the next line, I consider it broken. And when my small and large get above the next line, I consider it broken. So every time my small and large break above a divergence on my small chart, I reset my count as I look for those three divergences. Does that make sense? So here we had one, right? And they couldn't break. And we see another one and it couldn't break. And we see another one and it couldn't break. And man, that's a solid line in the sand. Them just saying, dude, there's trouble here. Let's get through it, right? Let's get through it. Let's get above it. Let's find a way to not trade into stuff that could halt our forward progress. Great question. It can be done. Past evaluation with 7 trades in 2 days, 100% good, all trend trades. Now to do the same in the live account. This is my favorite, guys. Don't take my word for it. I don't know what VIX is, Washington. Like VapoRub is above 22.5. I have no idea what VIX is. Guys, if you're wondering if the plan is a good plan, here's Victor's experience with it. Oh, haha, don't use it. I don't need it. My plan doesn't require it, so you'll find Washington, and you'll probably get a kick out of this. And I think some people get a kick out of it, and some people it aggravates. I am not the most knowledgeable outside of the Nexgen indicators. Because when I started trading, I had never traded. I had never seen charts. I had never read indicators. Hell, I couldn't even wrap my head around the idea that you can sell something that you don't own. And it just pissed my brother off. He's like, dude, I need you to be okay with this. I'm like, John, I need you to understand that I don't see how you can sell something. Yeah, I think so. And it was funny. He goes, just accept it for what it is. Learn the patterns. And that's what I try to do with you guys. Just learn the patterns. I don't have to build a watch to tell time, and I don't have to understand internal combustion to drive a car. There's very specific patterns that you can prove when more than you lead. Simple is always better, especially when you're me, Washington. I am so right-brained. All right. Gonna run major 8. Awesome. Market moving this fast, making my head catch on fire. Y'all listen to this man. He will give you what you need to thrive. Amen. Ron, have a good one, man. Formula One drivers don't need to work on their cars. And Michelle, you asked Mark Dean if you get stuck with the delivery of crude oil. I wondered the same thing. I wondered the exact same thing. So check it out. Triggers are down. Weak side. Room to trouble. Market pulls back. And Victor, where did you get in? You said the zone shifted. And you get in crazy late, and it still works. Crazy late, and it still works. There was your pullback, and with the momentum, Victor, that was your entry right at 832 with all the room to make even more. Great trade. Great trade. Here, I'm going to show you guys something. I don't know if I'm supposed to show you guys this or not. I just want you to see something. This is what I do. This is my brain, guys. When I'm not teaching you guys how to read indicators, that's Emmy. She's the love of my life. I'm drawing on people. I've been a tattoo artist for the last 12, 15 years. Everything that I do revolves around pictures and patterns and seeing things and not worrying about all the details. And for me, it works, right? I either have momentum or I don't. Thank you. And I either have a clear path or I don't. And I either have a definable entry or I don't. And when you build from that core, when you just embrace the ever-loving snot out of the idea that there is a perfect trade, what happens is that you get better daily. You study daily. But if you can't do the easy stuff, it's okay to not try the hard stuff, right? I suck at math. Just obviously, I don't know anything about tech. Guys, I'm not good at math, but I can be taught math because repetition, right? I failed college algebra 4 times, but eventually I beat it because dag nabbit, I'm stubborn. But what I always try to do is get to the answer, and I never focused on the process to solve an equation, right? I would always omit a step. And my teacher told me this. She goes, Mark, you wouldn't be so bad at math if you would stop skipping a step. And I'm like, ugh. And I never put the effort into learning the steps, guys. Once you learn the process, the results seem to follow. Look at it. Look at it. Love it. Once you learn the process, the results seem to follow. So I'm not worried about the results as a brand new user. What I'm focused on is the execution of the method. That's from Mark Douglas. Because when everything is good, I'll find a way, right? And it means that I have to sit tight, that I have to wait, that I have to be patient. It doesn't cost anything to be flat. It doesn't cost anything to not be in the wrong trade. But it typically costs a lot to be in the wrong trade. So if you're new with me in here, welcome to Nexgen. That's us. Holy crap. There's so much coming at me. I don't know the language. But every day it gets easier. Every day there's a little more clarity. Every day it starts to make a little more sense until one day you wake up and you're like, man, this is easy. I got this. Miss Jen, let's see what you did. I just showed this. You just drew this up, right? There's a strong top. Guys, what does that mean? It means that the buyers were in control, and right at a key Fibonacci area, the sellers took over. Whether it's because the buyers stopped pushing up or whether it's because there were more sellers than buyers, who cares? It's a strong top. And when it's a strong top, this trade right here with the potential to break is more likely to work. And where's it most likely to work from? The areas inside of triggers. Jen waits for a little confirmation. That's okay. And gets paid. And what is that, $100, Jen? Quick little $100 snapshot. Even with the late entry. Quick little snapshot. But she said, divergence not an issue. Jen, I'm going to respectfully disagree from the bottom of my heart. Divergence kills more 50-50 trades than they don't. That's it. I don't care how strong your top is. This will kill it more often than it doesn't. That's the one. Doesn't matter, Jen. That doesn't change that divergence kills it. Now, if your plan is different, that's totally cool. That's not me to tell you how to trade. But I will tell you 100% that divergence is still a problem, even with 3 triggers through. Why? Because it is robbing the momentum that you need to break that area. Now, you did have strong triggers. You had a well-defined area. You had 3 triggers through. You had a strong top. Jen, I don't disagree. It's a trend trade, Boaz, or a momentum trade, either one. I don't disagree that you had so many advantages in play that it made sense. I would have taken that trade as well with my plan because of my experience. But does divergence kill 50-50 trades? There's one Well, that's from the top, killed it. There's divergence, killed it. There's the potential to break at the bottom, killed it. There's the potential to break at the top, killed it. Potential to break at the top. There wasn't divergence. Oh my gosh, 67? All right, there's one, Jen. So what, like 70%? Potential to break right at 616. Divergence again, making bad things happen. Potential to break in the 4 o'clock hour. No areas inside of triggers, making bad things happen. So there's a pattern that you can prove wins more than it loses, and there's a pattern that typically detracts from that success rate. I would agree, from a strong top. So Jen, let's address that, right? And this is me on language. It's not that divergence is not an issue. This is what I disagree with. I don't care if it's a strong top or a weak top. Divergence is a problem on these trades. Why? Because the perfect trade requires momentum, and divergence is a loss of momentum. But let me show you, and this is exactly what I want all my new users to get out of this. When you know what perfect looks like, you think in terms of advantages. Jen knows a strong top can very often trump one divergence with strong triggers for this trade. She chooses to modify her plan to lean on this pattern. So for the brand new user, this is a 100% no trade that doesn't fit the plan if that's the plan that you're following. For someone of Jen's caliber who spent time in front of the market to recognize these patterns, she has seen this enough to say, you know what? I could still lose this trade. I know it's not the best trade, but I'm willing to take this trade and manage. Because it's a bar fight, right, Jen? Strong top is an advantage. Let's put this in advantage color here so it's bright. Strong triggers is an advantage. 3 triggers is an advantage. Strong triggers on the small chart is an advantage. Definable entry is an advantage. Divergence. Aussies always win those fights. But guys, there's always someone bigger, right? So you make sure that you've got them behind you instead of in front of you. Jen, it's a great trade. But divergence is not an issue with 4 triggers through. Not with 3. That's it. That's for the new kids. That's turning it into a lesson for the new kids. I love the trade. I love the trade. And I love that you're willing to get paid. All right, Adam. Good momentum. All triggers through. Room to trouble. Divergence, who cares? It's the perfect trade. It just didn't win. Adam, I would bring this picture, put it before the Nexgen court of law, and be absolved of all wrongdoing. You had momentum. You had path. You had, well, yeah, the perfect entry even, right at the top of the triggers. Nathan, it's on top of them. Is that inside? No. Horseshoes and hand grenades. Adam made a decision. Small little loss. It's a beautiful trade, Adam. Didn't work. Anything that typically wins 70 to 80% of the time is obligated to lose 20 to 30% of the time. And now we get good momentum, good top, room to trouble, 3 triggers through. You had already had 1 divergence. You take the entry, and they got you. They got you. So it was the potential to break and didn't. And it was a good-looking setup. And it didn't work. And man, that's frustrating when the first 2 don't work, isn't it, Adam? I walked in today, I took the perfect long trade. My first trade was the perfect long trade. And my stop was where the market shouldn't go. And my entry was beautiful. Time to change the plan, Phil. Zip it. And I took a $320 hickey on my first trade. And I took 2 more trades that looked exactly the same. And I'm up money. Guys, this happens. It's a cost of doing business. Don't change your plan. Momentum, not a good top. Momentum, great entry. And that reversal bar got you, didn't it? That reversal bar, stop behind it. All right. So we're going to talk about something real quick. Phil is adopting the KISS plan. And the KISS plan says when you take your entry, if it's confirmed with a reversal bar, your new stop is 2 ticks above that reversal bar. Have you guys seen that in the KISS plan? That's the wrong plan. Hold on. First stop movement will be 2 ticks above or below a bar in the direction of the trade. This is the KISS plan, guys. This is the remedial welcome to Nexgen, learn to read your indicators, most basic way of approaching management. Because you don't believe in this trade yet. Because you're not always willing to get paid yet. Because you don't know where stops go yet. So what happens is you will craft a plan tailored to your personal goals based on your experience reading the indicators. Now, Adam, let's ask ourselves a question. This is just me. With odds favorable momentum, with absolutely nothing in the way, with the perfect entry, is it okay to hold your stop where the market shouldn't go? And this is only a question that you can answer for yourself, Adam. And this is a little bit of a moving forward, right? Because the large chart's perfect. The entry is perfect. And what you have here is a little fluctuation inside of the retracement zone. The advantage is never gone. You've even got one-to-ones to back it. Does it make sense to leave risk on the trade? Some of you, the answer is no. Absolutely not, Mark. I don't want to leave the risk. They already tried to go. I'm behind it. I accept it. That's cool. Some of you will say, I'll get back in with a reversal bar because everything is still perfect. Some of you will say, I don't know. I don't know what to do yet. I have to keep working. I have to keep taking pictures. I have to keep getting repetition. But if I'm tracking my trades, I'm learning entries, but I'm going to grow with management, right? I'm going to grow with management. This one says no stops in windows. What does that mean? That means that if you're still in the area where the market is most likely to produce a winner, it doesn't make sense to get stopped out there. Even if you've already entered and a reversal bar has happened. That's how plans grow. I won't get stopped out inside the woo. This is old. I can't see the date on it. No, it's 2024. It's about 2 years old, October. So I like it. Remember, everything starts with basic and then it grows. So far, entries are awesome. Momentum, path, perfect entry, and they give it back to you, Adam. Probabilities. Great job. Probabilities. Great job. Next one. I love this stuff. Momentum, path, pull back to the area, and they give it to you. Probabilities. This is pretty cool. We're seeing Adam take the exact same entry over and over and over, and some of them are winning. Winner, winner. Some perfect entries get stopped out. Only the potential to break is never the best entry. Some great entries get stopped out. We're watching probabilities come into play here, guys. No momentum. Huge stop. And you got lucky. Can we agree, Adam? Without the momentum to push it up, there's no reason to believe it's going to push up. And that is a pretty extraordinarily large stop, which means that perhaps there was a little bit of hope on the trade. And they loved you just enough to get you in there and get you out. And while it's doing this, this is where we all sing the, oh shit, I sure hope it goes up so I can get out of this trade. Done it. Been there. Without momentum, it's hard to believe that market's going to push up. And it didn't. It overran areas huge. So this is the trading gods, Adam, giving you a little bit of grace because they love your consistency and they know you're going to make a mistake every now and then. 3 triggers through, 3 divergences in the same location, and you take the trade anyway. And once again, lucky as shnikes. Weak top, no clear path, only 3 triggers through. 1, 2, 3, 4 divergences in the same price range, and you say, like hell, I'm going to beat the system. And once again, man, great entries gave you $100, and you got out before they took it away. And it looks like they took it away pretty quick. Does that make sense, Adam? 3 divergences on the small chart. 1 divergence on a 50-50 is pretty bad. 2 divergences is typically pure crap. 3 divergences is a termination in all arenas. 2 mistakes. That's okay. And can we celebrate the other side now that I've said holy crap, you got lucky? Let's celebrate for a second. You took the right entry. You had great momentum working for you, right? And you had it in your head to protect your investment. Great management. Making something from nothing from great entries. Making something from nothing. Able to capitalize on trades that are failing because your entry is so stinking good. So, Adam, I'll bust your chops a little bit because I know you're going for consistency. But I'm also going to celebrate the goodness in that. How long is the access if we open a prop account? What do you mean, Washington? To the room? To here? Dude, hang out. Have fun. The indicator set. The indicators don't come with a prop account. So, Nexgen Software Services has been around for nearly 30 years with these indicators. We've had live education rooms since 2000. This is where we built. Guys, we've been in the game forever. Nexgen Pro Trader Funding is our baby. It's the new one. It's the new concept built on 30 years of experience. So, Washington, you don't get our T3 indicators when you open a prop firm. Most prop firm users don't want it. But here's the cool thing. If you're sitting in this room and you're like, man, there's something to this. I like this. I want to study it a little bit more. Go click on that demo tab. Get your name in the hat. Get the indicators for a week. Look at them. Come sit in my room. Participate. Let me teach you how to read them. Let's see the potential, right? Let's go through it and let's do what Victor did. To follow that trend trade, to be conservative, to pass that account in 2 days with 7 trades. It's most people don't get this, but I'm literally giving away a cheat sheet to pass evaluations in this room. Wayne's back. Awesome. Let's see what Wayne did. Guys, how are we doing so far? Any questions? I'm going to tell you right now. The people that sit quietly don't get to where they want to be. The people that don't participate start to trade their own truth, and they can't figure out why the plan doesn't work. Guys, all you got to do is start up a conversation with me. I'm pretty warm and fuzzy. Let's see. Wayne says the trend is down. I'm going down with it. I'm on the strong side of the triggers. This makes me happy because there's a lot of push. I've got room to targets. So when the market on my small chart has that odds favorable momentum look, separation, I'll let an area break. And when they snap back to it, I'm going to sell that mofo. And I'm going to ride that momentum down. And guys, that's the Nexgen momentum trade. That's the second trade on the plan that you've been given. And Wayne, this is absolutely flawless execution of that trade. And you know what? I'm going to put it in here because I have people studying the momentum trade. I'm going to start stealing your perfect momentum trades and use them as tools for new users. I'll give you credit because that's everything that's on the plan. Perfect checklist. Down, strong side, breaks, snaps back, and then you jump the fudge in on the way down and get out of trouble. Exact same trade. Exact same trade. This trade is no different than that trade. The only difference is you didn't get your entry. But it's the exact same pattern, the exact same look. It didn't break the zone? No, it didn't, did it? Oh, I missed that. Didn't break the zone. So we needed this bar to come back. My bad. Thanks for that, Wayne. Everything is down. Transition. Room to trouble. Pull back to the area. Close below. Wayne's making money. Out at the zone. Both contracts before you could even place a middle target. When it's the right trade, it goes, doesn't it, Wayne? Perfect. A momentum trade, a trend trade. And then, guys, we looked at this earlier. Wayne, when you weren't here, I bragged on you a little bit. Self-analysis. What am I doing? How did it result? Did I follow my plan? What was my result? What is that? How was my result? Did I make a mistake? What was my result, right? Can you shoot me the free value gap entries in the indicator correction and continuation entry method? Kezi, I have no idea what you're asking. I don't have any idea what you're asking me. I'm sorry. Free value gap entries. I want to help you. Guys, there's a million ways to do it, right? There's a million ways to do it. Nothing is better than another. It's just different. So, Kezi, if you want access to the indicators that I'm teaching right now, go to the Nexgen website, sign up for a demo, give them your information. They'll get you a full working copy, and I'll do everything in my power to teach you to read them. Right now, we're speaking a very different language, and I'm struggling to keep up with what you're asking. I hope that gets you where you need to be. If it doesn't, let me know. We'll figure out how to get you where it is that you're asking. But the demo will get you access to everything for 7 days, whether it's NinjaTrader, whether it is TradingView. And then once you have that access, man, I'll give you a plan for whichever one you're trading. I'll give you a spreadsheet to study, to track your trades, to look at the patterns for whichever one that you're trading. And I'll give you all the feedback you can handle as you learn to read those indicators to make sure that you're reading them correctly. All you got to do is sign up for the demo, brother. Good stuff. I hope that's what you were asking. If not, I got real loud for no reason. I do that sometimes. Guys, go back and look at what you did, how you did it, what worked, what didn't work, what can you do better. Self-analysis pushes you over the edge. Self-analysis takes you to the next level. And if you're not sure what the analysis is, drop it in the room. We'll talk about it. Hey, Mark, check it out. The trend is up. I'm on the strong side. I got room to trouble. And when the market pulled back to an area, I got in with the close above, and I was able to make a metric butt ton of money with the perfect trend trade. Great job, Wayne. Textbook. It's the perfect trend trade. And when he can't decide whether it's up or down, when he can't seem to get above or below, Wayne says, This is not my edge. This is not my advantage. This is when I am better off doing nothing, buying Trina flowers and taking her out to dinner and getting her things that sparkle because she's so rad. And that's probably what he did during times of indecision. Good job, Wayne. Way to take care of. And then, Kezi, don't be afraid to reach out if you need help. I can't stress that enough. Triggers are up. Looks like the strong side. Not getting the warm fuzzy with this momentum entry. 2 divergences. I can't see your large triggers, but you're absolutely right. A couple divergences and an HVA. Maybe not your happy look. Does it fit the rules? I'm assuming yes, right? So guys, in the beginning, take them all. Take them all, sort them out. Take them all, sort them out, right? And with a little bit of experience, you'll start recognizing things that want to keep you out. What did it do after, Wayne? So whenever I skip a trade, it did drop. How far away were the large triggers? Were they way down? Because it is a moving average, and sometimes it'll close that gap. Good breaks, man. Just that in the moment, spidey sense tingling. Spidey sense tingling. All the momentum, right? From a weak bottom, Nathan, the mid band may create a bounce, right? So your management hat's on. Pulled back to the area, hasn't gone outside of the zone. Let's see what it does. From a weak bottom, is this a pattern? I don't know. Should we go long and put our stop behind the reversal bar and see if momentum and path wins the fight? If I get a reversal bar, I move my stop behind it. If it reaches my first target, bonk, I go break even. And now my worst case scenario is the first target reached. It either hits my second target or it stops me out break even. Some of you might even go break even in a tick to cover commissions. Oh, that should have been it right there at 200. That was my $300 trade right there. Guys, that's it. High probability trend trade. Did I follow the rules? Did I have momentum? What do you guys think? Yes. Did I have a clear path? Yes. Did I have a pullback to an area inside of triggers? Absolutely. I got in late, but it didn't change the result. Another winning trade. Yay, look at this, guys. We're up $1,000 a day. You guys are so awesome making all that money. You money makers, you. It's all monopoly money for education purposes. But I don't pull the trigger if it doesn't fit the rules. I refuse to pull the trigger if it doesn't fit the rules. Michelle, it absolutely warms my heart that you're posting in my room. Boaz, momentum, missed the first entry. Everything is down. Since the area is not inside of triggers, Boaz catches it on the way down. Makes some money. Great job, Boaz. I love this, guys. If I'm on the wrong side of the triggers, I'm such a fan of confirmation. That's one of the times where it makes sense to me. All right, let's see what you did. All right, Michelle, this is important. Are you ready? This is important. Strong triggers and only the potential to break, right? Weak bottom. First one without divergence lets you make a little money. Even the second one with divergence lets you make a little money. Even the third one with 2 divergences lets you make a little money. And then finally, you're like, everything changes. Everything changes by the time you get in. This is where no indecision pays dividends, right? And 2 divergences on the potential to break from a weak bottom. See, it's only 2, Michelle, but it's not a clear path, is it? It was only 3 triggers through. So when we go back to, and this is what I want you guys to see, and I hope this makes sense. And I said once, if you really want to get on top of speaking in terms of advantages, Print this out. Guys, print this out and put it on your desktop. And Michelle, let me show you why talking in terms of advantages will help you trump the emotion of wanting to be in there and wanting to make money. So let me get all of these off of there real quick. And let's go through it. So you had momentum, yes? Large chart, rule number 1 met, perfect. I'm gonna highlight that. Good job. Perfect read, 100%. And then with 3 triggers through, this is what you have to do, guys. Is there a clear path with only 3 triggers through? Give me a Y or N in the room. If this is your trade, you should give me a Y or an N in the room and let me know what you're thinking. Nobody. It's amazing. Okay, so Michelle, that's what I need to hear. That's what I need to hear. This fib is not a part of the equation because price has not reached that fib. That fib is a red line floating in space that has absolutely no impact on your entry. Does that make sense? Do you see these yellow 1-to-1s? This is the fly in the ointment. Why? Because only 3 triggers are through. And what does that mean? Hold on. I'm gonna go back to a picture real quick. We're gonna go through this start to finish, Michelle, and you are about to have an aha moment. There's no doubt in my mind. I want you to learn this. Counting triggers when price reaches a line. But we're not even talking about 4 triggers through. No. What would the red be? Maybe a target, right? Michelle, if price doesn't get to an area, who cares about it? That's where the market might go. But the problem is you have to take the right entries to get you there. So with only 3 triggers through, do you understand that it is not a clear path? Everything has to do with the line that's been reached and the number of triggers that go through. So the line that was reached were these yellow 1-to-1s. 3 triggers through was your count. Does that make sense? Cool. So watch how this works. Michelle, you don't have a clear path. Doesn't mean there's not a trade. The potential is there. But if you look at your chart and you say, man, I just don't have a clear path. Michelle, what you can do, is you can say, and this is what I would say, I don't give trading advice, without a clear path, I am going to lean on momentum and I'm going to lean on that entry area, right? I'm really gonna grab hold and love on those other 2 advantages. Does that make sense? Because now we're in medium probability. Now all we're doing is we're trading the potential. And that's good. It's still a great look. So because it's medium probability, because it's the potential, Michelle, I don't want to give up momentum, right? And divergence is just that. Divergence is a loss of momentum. So it's already starting to go away. Smalls inside of the large is a loss of momentum. It's going away more. Another divergence is more loss of momentum. And now all I'm really working with, Michelle, is an entry area. Does that make sense? Awesome. And I think this is what it is we get so excited about the potential that we forget that it's not a high probability trade, that there are things that have to be taken into consideration. And then Michelle, from a weak bottom, it's already problematic from the get-go. So when we go back to the KISS plan, and that's not the one that I wanted to go back to, when we go back to the KISS plan, this is the best of the best. At least 3 triggers through, you had it. And you did. It was beautiful. And we weren't from a strong top or bottom. That's problematic. And we did have odds favorable momentum. And come on, snag it, work with me here. There we go. And that's a good thing. But I didn't have it on the 5-1, and that's a bad thing. And I had multiple divergences on the 5-1. And do you see how when you're only working with 25%, because we're going back to this very basic. Michelle, if I told you before you pulled the trigger, you've only got 25% of your advantages, do you think you would have been inclined to take that entry? Not from an area inside of triggers. Probably not, right? And that's good. And Michelle, what we just have is one of the biggest growth processes that people can go through. It's when you believe, when you see, when you speak in terms of the perfect trade. You know when the advantages start to go away. And if you memorize your checklist, right? I will only enter if this checklist is there. This checklist is designed to keep you in the good graces of advantage. So are there a million ways to take trades that don't fit the plan? Of course. But until you're making money consistently, focus on that really core, right? And you'll start to see things beyond. Were you in the room for the conversation on Jen's trade? Where Jen said, and let me find it because it's brilliant and it's such a good look of where you're headed. Jen says it's 3 triggers through. And it is strong triggers, and it is strong triggers, and it is a strong top. And Michelle, if we go to Jen's chart and we do that same thing here, it is a strong top. Whoops. So I'm going to flip this over. And it is strong triggers. And I'm going to flip this over. But it is one divergence. Michelle, do you think that you'll find a point in your life when only 25% of all the greatness is missing? That the 75% makes you feel pretty good about taking and managing that trade? And it all goes back to the very core. So this is why Jen said, I've got almost everything perfect except this one stupid little thing. I'm going to take that trade. And why you could have said, oh, crap, it's going sideways. And that takes time to get there. So big smile and a hug coming at you for having the courage to post in the room and take the lesson. But the lesson really will pay dividends long term. So 3 triggers through. There's your divergences. Once again, you're welcome. Strong triggers, pivot, stop out, 3 triggers through, right? Stopped in the same area twice. Was this too risky with the weak top? It doesn't qualify as KISS. It definitely doesn't qualify as KISS. But let's weigh advantages. Weak bottom, mid-band holds, full reversal, odds favorable, 3 triggers through, super strong triggers, virtually no risk. Can you take and manage, Michelle? Yes. Are you allowed to be surprised when it just absolutely runs you over? If you talk about what's good and what's bad? No. That's all trading is. I know what I'm up against. I make the choice to enter. Does it fit KISS? No. Is it a bad trade? Not at all. It's beautiful. Great job. Weak top, only 2 triggers through. Well, where's your entry? Up here. Looks like 3 triggers through. And dun, 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 rolls. I can't tell where you entered. Right at the 1-to-1s. So Michelle, did you say that my stop belongs above these triggers where the market shouldn't go? That's huge risk, right? And it works out for you. Multiple divergence. That's iffy on a strong top. That's super weak triggers, maybe overrun. Great momentum, 3 triggers through. They're coming down with a vengeance. Mid-band's not in play. The entry makes sense. You don't have a lot of momentum here, which means guard in place, right? It fits the rules almost. It's close. It's close. Triggers down. Weak side. Pull back. Momentum, small triggers. Is it really momentum, small triggers? Those small triggers are up, Phil. This is anticipating. Not really a momentum trade. If they were down at the time, I'd give it to you. And you made money. Nice job. Nice job. Those were probably down when you got in. Those were probably down when you got in. You're welcome, Michelle. And let's do this every day, right? Yeah, they've got to be odds favorable momentum, Phil. Got to be separation between the small and large in the direction of the trade. All right, Michelle. Any separation between the small and large? There's none. It closed the gap already. Momentum is gone. Clear path? Absolutely. Do you see how your area is not inside of triggers? Very basics, right? Very basic, very remedial, very not overthinking. I don't have separation, but separation is strength. Therefore, I don't have strength. I do have a clear path, but I can't use that magical phrase. Buy or sell an area inside of triggers, because that's where it all comes together. So Michelle, if you need those little key phrases, and I think they pay huge dividends. This is my go-to when I'm talking and looking at my charts. Here's the phrases to describe the very basic high probability trade. So if there's not an area inside of triggers, under no circumstances is rule number 3 met. If there is no separation between the small and large, under no circumstances is rule number 1 met. And what it does is it creates a very black and white approach. As you learn to read your indicators a little more thoroughly and find yourself in a position to see stuff beyond the very basic. Does that make sense? So first we're going to lay the foundation, and we're going to learn them like a scholar so we can break them like an artist. I love it. This is the best part of the day, in my opinion, is when you guys give me the opportunity to provide just a little bit of clarity on what it is you're doing. All right. Not a good bottom. Good momentum. Clear path. Pull back to the area inside of triggers. Hit both targets. Adam, it's perfect. And Adam, this one fit the bill too. That's the one we took. So there's 300. Come back and get you. That's a $600 day in 3 minutes. Those of you that are working through some things, momentum, clear path, pull back to the area inside of triggers. Momentum, clear path, pull back to the area inside of triggers. Once you learn the basics, you'll start to see more. Nice job, Adam. So Adam, you're running what? You're running about 75% on high probability trend trades today. Maybe 80? Is that fair? I hope. Triggers are up. Strong side. Room to trouble. On that one of Adam, there was divergence. Is that different to my look? Here? Is that different than your look? Absolutely. It's momentum in a clear path. It's not 3 triggers through. He has the first 2 rules met perfectly. It'll take 3 of those bad boys. That's okay. Always ask, right? Always ask. There's your pullback to the area. Should I have seen this as the word Wayne uses? So let's keep it black and white, Trina. Triggers are up, strong side, room to trouble, pull back to the area. There's your first close above. There's your, that's a down, down. Everything's going up. And it just doesn't work. Why would this be indecision? They reached support and support held for 7 bars. That seems like a pretty clear-cut indication that in the moment, support's doing everything we would expect support to do. That's not indecision. That's an area holding. That's okay. You took the right entry, and it didn't work. Welcome to your first amp trade. Let's kick the shit out of her and see if she trusts her plan. Right, Trina? How often does this one win? Like, let's just be completely honest. When it's up, when it's strong side, when there's room to trouble, when it's the perfect entry. Trina, do you win this one more than you lose it? Just you personally. Nothing to do with what Nexgen says about statistics. When you take the perfect entry, do you win more than you lose? Yes, that's trading. Up, strong, room to trouble, pull back to the area, close above. They gave you your money back. With the same rules, with the same pullback, with the same 5-bar slide, with the same close above, with the same room to trouble. Congratulations, Trina. You just defined probabilities. Let's take 8 more of them and see where you're at. Great job. And good job being willing to stick to the plan despite the handing of the ass. We've all done it. Every one of us has securely held our buttocks in our hands. It's just part of trading. Oh my gosh. All the momentum, nothing in the way. Perfect entry. You get out on the second divergence. On the first one, make a couple ticks. But you're like, wait a minute. This is perfect. Let's go make some money. Boaz, perfect, beautiful. Do you guys see it? When your large chart looks like this, you will lose. But you're probably going to win more than you lose if you're following the plan. Great job. Holy annotations. Down, transition, pull back to the midband, close directly into trouble. So you jump the fudge in, and it goes down. Is this you again, Trina? Did it fit the rules for a trend trade? Is it because it broke below that you jumped in? Okay, but your trend trade was up here, right? And then you reach support, and then support breaks, but there is no rolling of the triggers, right? There is no pullback to the area. There is no close below. You just jumped in. I'm below it now, I hope it goes. Not a trend trade. That's just jumping in. But you had some momentum behind you. You had room on the large chart, and it did go to the next area of trouble. But did you put your stop all the way up above the pivot where the market shouldn't go? It's just a late entry. No, I tell you it's a late entry. I tell you your trend trade's up here. Good job waiting for it to break. You've been taking momentum trades, Trina. You've been taking the pullback to the area with momentum and catching it on the way down. That's a momentum trade. That's a good entry. The momentum trade's up here. But you didn't wait for it, right? You didn't wait for it. And look what they did. They came right back to it. This is why, Trina, when I say you guys are just jumping in, you're bucking the system. You're not waiting for the pattern. You're saying, I sure as hell hope that momentum trade doesn't come in because this is going to scare the ever-loving snot out of me. As it goes 88.10, as it goes 22 points above my entry. That's terrifying. But that's what happens on the jump in very often. Does that make sense? Okay. So entry supposed to be at the close below the triggers by mid-band on the 1 minute. So 10K, the rules say, I'm going to go back to the rules, right? The rules say that you'll buy or sell a pullback at an area with a close on the correct side of the triggers. But the rules also say, 10K, that if you have an area right here in front of that close, rule number 2 isn't met. You don't have room to trouble. Does that make sense? So what happened is Trina didn't have any room. It was directly into trouble. And she knew it, so she chose not to take this entry. And what she did, and she said, well, the expectation of this trade is to reach trouble. And she jumped in the middle. Well, there wasn't room. So no, it wasn't. It didn't meet the rules. Because there was no room once you get a close below the triggers. So no rules were met for the trend trade. This is I'm going to jump in. And Trina's like, God, stop beating me up, Mark. I promise I'm not. So when you just jump in, let me show you how smart. Of course I'm right, 10K. That's why I teach. Haha, just kidding. That's me being arrogant. My wife would say I'm good at that. So the pattern is, right, once it breaks below here, the pattern with that momentum and this look is snap back to the area and crank down. And that is a momentum trade. And let me show you how smart Trina is now that I've busted her chops. Trina knows, oh, so you took it a tick below trouble? Trina, you're not making it any better. The momentum trade stop goes behind the area you hope holds, which, Trina, puts you right back into trouble. Puts you right back into trouble. It's okay. You got excited. And it worked out because you're a wonderful human being. But it's important to me that you understand that it's not a trend trade. Because the trend trade stop goes way up here, and that's ridiculous, right? So the reason I say it is because there's times in this room where people send me things and they say, hey, Mark, this is my trade. This is my plan. This is what I'm going to do. This is what I have proven wins more than it loses and typically brings me the success that I'm looking for. So if I notice that someone that has done that begins to show me trades outside of what they've told me their plan is, I make a point of mentioning it because we don't always notice it in the moment. And it's not me playing good cop or bad cop or cop at all. It's me saying, hey, you told me XYZ, this is ABC. And it doesn't fit the plan that you told me you were trying to hold yourself accountable to. 2 ticks away. Looks like a lot of areas on the small chart too. Good top. Sure looked like it was, right, Nathan? Sure looked like 2 ticks was enough. So even if you were going to play, hey, it didn't reach it yet, couldn't you wait for confirmation from the midband? If I'm going to take a shot to get to that fib, that's where you can say, I'll do it with a little confirmation, because 2 ticks can spoil the pudding there. How does that work? Well, it's cranking, huh? If I want to go long and I want to reversal bar, I'll put a stop limit right there, right on the reversal bar marker that says if this bar turns into a reversal bar, it will put me in a long position. Wait for the midband. How do I wait for the midband? Is that the question? When it gets to the midband, you see if it gives a reversal bar. So as it pulls back, oh, no, what I'm saying, I'm sorry, I misunderstood. Nathan, you know 100% without question that Fibonacci areas are made from thousands of calculations, right? Which means that this area probably came from a multitude like this. And then it makes this one red line, right? So Nathan, every time you're 2 ticks away, your brain screams, shit, that might have been it. But I don't know. But it could have been, right? Is that fair? But since it didn't, and I'm dying to be in a trade, I know where my entry comes from, but I'm not just going to jump in and hope that I'm right about it not being fibs hit. What I'm going to do is when I get to that area, I'm going to force them to give me a bar in the direction of my trade so that I can put my stop behind it. And because it could have very well been the top, I'm going to manage the shit out of this trade and look for any sign of change. Does that make sense? Could you defend it as a high probability trend trade in this room? 100%, Nathan, you could. Price did not reach the area. But knowing what you know about how fibs are born, you can use your chart read to make good decisions. Yeah, going long. The trend is up. The momentum is up. Yeah, there's no short there. I see. There's the confusion. No, there's no short there. None whatsoever. Not for a new user. Count trade, usually do not trade it. Oh, counter turn trade. Market is in a range. That's a huge range. So, Nathan, how do we go the other direction? When your rules say absolutely no more shorts, and you've got a giant termination condition on your large chart, and then you get 3 divergences in the same location right at that, and things start to roll, Boaz says, oh, here we go, baby. There is no way on God's green earth I can go short. Everything says no. Everything says no. And Boaz says, you know what? I'm going to go long from the strong side of those triggers, and I'm going to see if I can't make some money. It's counter trend. There's a lot of experience that goes into recognizing that pattern. Nicely done, Boaz. Nicely done. For those of you that aren't there yet, John Novak had a broker call him, this is 20 years ago, 25 years ago, and said, hey, John, do you want $1 million in your account? And John's like, yes, I really do want $1 million in my account. And he said, okay, every chance you get, or first he said, I want you to put $3 million in your account. And he said, every chance you get, go counter trend. You should be down to $1 million by the end of the year. And Boaz, who takes beautiful trend trades over and over and over, had built enough of a cushion that he feels good about it. Hey, if I lose this one for $100, I don't give a shit. I'm up 1,500. I'm right where I want to be as a trader. Maybe I take a chance this time because my indicators say to. And guys, that's kind of it. If you don't piece it all together, starting on the large chart, starting at the trigger location, going into the small chart terminations, looking at what the small chart is telling you, and getting in on the right side of things, counter trend is a little hard. When it works, you look like a rock star. When it fails, you look ridiculous because we typically get run over fast on those. But Boaz, that was the perfect way to take it. Weak top, I still don't. And what I've found is that I don't need it to be successful. And that's just me and my own personal plan. I don't need a counter trend trade to hit my goals daily. So I just don't bother with it. I know it exists. I know how to do it. I know what it looks like. It drives my brother nuts. Why wouldn't you take it? It's like, because it doesn't win more than it loses for me. When it wins, it looks awesome, and they're typically big moves. But when they lose, then I get pissed off, and I consider revenge trading, and that doesn't suit my personality. All right, weak top, all the momentum, nothing in the way. Weak top divergence, I did not take that. Talked yourself out of the perfect trend trade, Jen, because you had it confused with a medium probability trend trade, right? The perfect look, the perfect entry. I love it. We do that sometimes. We all do. I don't care who you are. Bamboozled, you flim-flammed. So, and guys, this is, don't, you mathematicians, don't get me for this. But the high probability trend trade is 2 charts, 3 rules. It's 5 things to think about. That's it. To do it in its most basic form, it's 5 things to think about. That's pretty easy for most of us. If I add the 50-50 trade, it's 2 charts, and I want to say there's 4 rules on that one. And now it's 11 things to think about, and I have to make sure I don't confuse the 2 trades, not only entry, but also management. And that's a lot harder for most of us. And then I add a counter, and then I add an HVA, and then I add a momentum, and then I add a gap, right? And every time you guys make what you're looking for more, you got to make sure you don't screw it up, right? Because the rules to enter here are different than the rules to enter here, are different than the rules here, here, and here. And the same is true with management. It's different things. So that's me typing 10K. Impressive, right? I took typing in 7th grade on a real typewriter. So this is one of those things that gets us every now and then, where we'll get into a trade believing it's a different trade. And it makes little mistakes here and there. But Jen, you still said, okay, didn't take this one. Here's the perfect momentum trade. I'll just take the second leg. I'll just take the second leg. Yeah, home row for sure. You guys ever put your fingers off the home row and try to type and it looks like you're drunk? But you don't look at your fingers or what you're typing, so you don't notice for like a paragraph? I've done that too. I used to type all of my wife's papers when she was in college because she's a hunter and pecker. Great job, Jen. And great job grabbing the rest of it. An even better job not taking that one directly into trouble. Awesome. Guys, there are victories to be found in every chart posted. And just because we recognize a challenge doesn't mean that you're a horrible person and not doing things right. Just saying, hey, let's keep this one on the radar, right? Let's think about these things a little bit. That's okay. Jen, you know the rules. I could hand you the microphone today. You could teach the first hour of this class. You think? I think you could. Doesn't mean you don't make mistakes. I still make mistakes. I've been teaching this class for 6 years. I think you could. I think that'd be fun. Let one of you guys come in and guest teach. See how you do. You're welcome, Jen. Odds favorable, clear path, pull back to the area inside of triggers, a whole bunch of money. Pretty easy, right, Nathan? And I love this. Strong bottom, divergent central on the 5-1. It's perfect. Did you need the strong bottom to take this trade? No. Does one divergence bug you to take this trade? No. Could you have taken this trade at that midband? inside of triggers? Yes, because that one fit the rules just as well. So there's your first $300, and there they are, letting you double dip. Maybe a little too close. Why? The midband's not a termination. The large triggers are up. The smalls are above them. The space is there. Oh, they were flat at the time? That's fair. There's no boogie in flat triggers, right? I like that, Nathan. Good job. See, I didn't take that into account. Nathan was there watching it. He said, no, Mark, those were flat, and the rules say that triggers must be widening. Wayne, you want to teach the room? Wayne, you teach people how to race. You would probably be a great instructor, dropping it down into remedial. The hard thing is not interjecting your opinion. I see a million trades, and I have to try and keep it basic. In the zone, strong side of the triggers, large down, push, so you accepted the advantage missing. Momentum pulls back to the area, tiny little stop, and you take it down. I love this. Wayne said it's not perfect, but I have enough working for me, I choose to take it. That's most trades, guys. But if you don't have that foundation of goodness, it's hard to know when to do that. Triggers up, strong side, odds favorable, pull back, didn't work. Rules met, good loss. Amen. Rules met, good loss. It's not even a loss. It's just a great trade that didn't win. It's an awesome look that didn't win. And guys, when your trend trades fail, was this morning, Wayne? Or I'm sorry, when your momentum trades fail, Wayne was probably waiting down here. Well, this one failed. Here comes the fight. Let's see if we can't just turn it into a trend trade and make it back. Momentum trades fail all the time, guys. When they fail, they typically turn into a trend trade if the large chart's perfect. And if the large chart's not perfect, you probably shouldn't have been taking the momentum trade in the first place. Good job on that one. I love it. Thank you for showing a loss, and thanks for calling it a good loss. 2 days ago, cleaned out, right on. Guys, if somebody tells you they don't lose, they're lying. If somebody tells you that they're 100% winners, they're lying. If a 15-year-old tells you he doesn't spend extra time in the shower not just to wash his hair, he's lying. Guys, mistakes are where the good stuff comes from. Mistakes are where we grow and how we get better. Man, Phil, I get people in the room all the time. I'm like, wow, you haven't posted a loser in 3 months. You're up $6,000 between last night and this morning. That's a good night. Hell, I started off with a loser today. I take losses every day. I think I've had one 100% day in the last 3 months, and it happened to be 2 days ago, which is okay because I had a 46% win day the day before. The market gave it back. Termination reverses the market. That's a strong top. Strong triggers, that's rule number 1. Price reaches Fibonacci support. None of the triggers are broken. I don't have rule 2 met. I don't care what my small chart says. That's how the chart read goes, guys. If you can't figure out if your rules are met or not within 5 or 6 seconds, you're probably fabricating a trade. If you could make a case for a long and a short, you're probably fabricating a trade. If you have to use the word but, should, I thought, you're probably fabricating a trade. So what do we need? There's 2 triggers. Keep pushing. I need 3 triggers. Go. You can do it. All right, we're getting closer. It's only 2 triggers. It's a strong top. It's all the momentum. Some of you are like, I don't care. With 2 triggers, give it to me. I'm following the KISS plan. I'm obligated to wait for 3. Remember when I said you'll learn to read your indicators, to stack your advantages, to say, man, I like this look. I've seen this look. I understand this look. And sometimes your rules keep you out of trouble. Only 2 triggers, divergence prints. Do you guys see it? That's an easy one to lose. Let me show you what Mark did. Whoops. Until he learned to follow a checklist. And some of you did it right now. It should. It will, because it has to, right? It's a strong top. It's odds favorable. It's just one stupid little divergence. Well, my 20,000 pictures tell me that with 2 triggers and divergence, I'm better off writing love letters to my wife. That's it. This says, don't do it. Avoidable losses. Pretty cool, right? Is it really that simple? And Michelle, do you see how only 2 triggers isn't kiss? And how divergence isn't kiss? And how that loss never had to happen. Never had to happen if you're following the KISS plan. Divergence is an exact term, so it hasn't been reached. So you've got odds favorable, clear path. Nope, double divergence up doesn't, well, if you took the entry, that's a great exit condition. And then Nathan, if the rules are still met on the large chart, can you re-enter with a reversal bar? Is that what your plan says? Or does it just say second higher divergence is an exit condition that I've adopted outside of the KISS plan for my management purposes? And this is where you break outside of the KISS plan, right? There is no you. What does your plan say, Nathan? If I get a second lower divergence, I exit. If I get a reversal bar and my large chart is still freaking perfect and says down, I might take a shot. That's up to you. So if your plan says, nope, we're beyond it, I don't want to do it. Okay, then you're asking me to give you an absolute. Go find 100 pictures and tell me when the large chart is perfect and you get a reversal bar after a second divergence, does it go down with the large chart more often than it doesn't? You're back inside of the retracement zone, right? With the reversal bar. Yes, Michelle. Something to think about. You're back inside of the retracement zone with a reversal bar. They just wanted the higher area. They just wanted to push a little bit beyond it. That happens sometimes. Now, if I were way out here and I was above the triggers, I'm not taking a trade back into those triggers, right? Termination, everything down. So stuff that you have to think about. And until you get the Rolodex, right? Until you get all the pictures, it's okay to not do it. So Michelle, the idea is that if I take my long and a second lower divergence prints, a lot of people will use that as an exit condition, right? But if the large chart is perfect, it's still just a trend trade. And what you're saying is that second divergence could push it into oblivion. But if I get that reversal bar in the right area, so Nathan, let's use that. If I get the reversal bar in the right area, I may choose to enter. And if I never get the reversal bar, it keeps me from hoping the market goes down. Does it guarantee a win? Absolutely not. But it says things got bad. I'm going to force it to go back in the direction before I consider. And now we have another strong top, right? And 2 triggers and 1 divergence. And they're trying to break. There's 2 divergences, and they haven't done it yet. So I'm going to bring up this picture again real quick. I think it's important to do this again. For you guys that need everything, right? Everything stems from the high probability trend trade. Everything comes from your very basic understanding, rock solid foundation. And then everything that happens outside of the high probability trend trade is a chart read that can be used for management. It's a chart read that can be used for different entries. It's a chart read that can be used for whatever you want to use it for. But it's not the 3 core conditions that build the perfect trade. So Nathan, wrong side of everything, right? Wrong side of everything. At 10:13, or is that 13:10? No areas inside of triggers. Yeah, so good look there, right? So I don't know if, when, or where that market's going to go down. Nathan, do you think there's somebody in this room with that look, with those large triggers not blinking, with the small triggers still below the large even though they're pointing up? Do you think there's somebody that said, hell yeah, I'll take that reversal bar? Of course. Does it fit your plan, Nathan? So take pictures. It might one day. And if you ever become a NASDAQ trader, you'll love this entry. Why? Because it's still at a mid-band, right? And it's still the good side of the triggers now, and the large chart still says down. So man, what you're doing is, remember, it all comes from the basics. And guys, divergence, effed it up again. Two triggers through, 2 triggers below, not a strong bottom, but that's an option for somebody. This is what's fun about what we do. Everybody's different, right? Grandpa always said if we all liked the same stuff, everybody would be chasing grandma, and that's no good. So I'm just saying, find your way. Terminations, smalls below the large, down bar, opens below, you take the entry. Oh, you enter on the pullback to the HVA. Gap theory did not take you out. Phil, I love this. Damn gap theory. Not at all trading directly into freaking support. It must have been those large triggers above. Phil, I think you should re-annotate this chart and maybe put a note that says don't trade into things that can create a bounce. Does that make sense? Where were you going to go? It already got there and bounced. Room to targets, brother. There's a reason that on the trend trade, it's the first 2 rules. Whether it's 1 minute or 15 minute, guys, they can create bounces. And you willingly forfeit the advantage of a clear path when you trade into them. You guys are freaking amazing. I'm proud of all of you. What a great day it's been.